Press subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time. Hello, good morning. So, how is everybody doing? So I've got my Irish moss, my sea moss. So I'm looking after myself. How are you guys looking after yourself and keeping healthy? So as you know, I'm a black belt in Taekwondo, teach Taekwondo. I'm all about the well-being, all about investing, all about making sure you invest in your life as well, beyond money. So that's why it's good to always have some affirmations. Like me, my children, I make them say, I'm smart, I'm wise, I'm powerful, it's going to be a great day. Thank you, Jesus. So today's topic is my new blog post, which I just about to upload, and it's about the stock market is a reality show, GME short squeeze, the war between millennial traders and the older generation investors. So what's interesting, I asked the question, has social media taken over the investing world? Because I don't know if you're aware of what is going on. There's a company called Gamestop, which is basically a US-based retail video games store. They have many shops and things like that, although they have closed a lot of nearly all their shops in the UK. So what happened with this is there's a social media group also called Reddit, and they decided that they like this stock, and they're gonna, and bear in mind Reddit have millions of people, and a subgroup of Reddit is called wallstreetbets. Now this community decided they're gonna keep buying GameStop stocks, whereas fundamentally you would see they're failing, the finance doesn't look well, so many people decide to get shorts, which is betting that the stock price would fall. And I'll get onto shorts in a second. So you got the millennials as well. So the millennials are the new generation, the ones on Reddit or Wall Street Bets, and they're deciding the stock is going to, or they just deciding they like the stock and they're going to short squeeze it and hold on to it, and we'll get to short squeeze in a late sec. So they're buying the stock, and this from years ago, but the power has just been in the last 5 days. GameStop has gone 700 and something %. So it's done a 7x from $32 to like $232 in 5 days. In 1 month, it's gone from like $20 to like $232. Although this is pre-market, so we'll wait till market opens today at like 2:30 in UK time, and that is like nearly 1,000%, a 10x in a month. So this is what's happening with GME and the potential of, can the social media world influence the stock market? So what is shorts? So shorts, remember in traditional ways of buying shares, you would buy a share, say it's £10, the most you can lose is if that share price goes to 0 and you've lost £10. And you make lots of money if it goes up, that's how you make your money, because you own the stock. Whereas on the other hand, people like to make money on the way the stock price goes down. So imagine shorts, you've bought 10 shorts, so you're saying at £10, if it goes down to 0, in that way you're making money, so you can make £100, because you bought 10 of them, £100 you made. If it goes to 0, you made £100. Although it's more complex than that as well, because there's leverage, there's Greeks, and there's other stuff that you could make more, you could make less. But just to keep it simple, you're making money going down, so you make that £100 instead of losing the £10. If you bought it and it went down, you're making that £10 if you bought it saying it's gonna go down, and because you have to do it with buying 10 shorts, it's £100 for those 10. So there's that way. But if it goes up and you said it's going to go down, there's infinite amount of money that you could lose because it's going up, and it can go up forever and ever and ever. So this is where short selling is different. So what's happened with this particular GME stock is many companies or many people have been buying shorts. Now let's get on to, normally there's a thing called, for you to sell a short, so hedge fund managers, which traditionally were the older ways of doing things, they're looking at things saying they're going to sell short because the company is losing value or this or that, and they make money on borrowing the stocks to people so that they can have these shorts, because when essentially you're getting shorts, essentially you're borrowing shorts. You don't own the stocks, you're borrowing stocks from people to be able to have that short position. Now, hedge fund managers and owners should not be selling if they don't have the stock. That's my daughter coming in. Good morning. So, they shouldn't be selling if they don't have the stock. Say hello. So they shouldn't be selling if they don't have the stock. But what happens is, because essentially if I'm selling you 10 shorts, I should have one of my clients, as the hedge fund manager, 10 of my clients should have the stocks that I'm going to lend to you. But what's called naked selling, which is illegal, is you're selling more than you have. So this is why GME comes to a position of they have 70 million shares outstanding, and shares outstanding is all the shares available that's been authorized, that's owned by the insiders as well as available. Then you've got the float. So out of those 70 million shares, 27% of those are for insiders, so they're not able to be shared to anyone in the public. So you've got like 40 something million available for people in the public. And out of those available, there's some that's available through shorts. Now, many people somehow are now in a position where there's 71 million shorts. So that's more than the floats, because the floats available is 40 something million, and that's even more than how many shares are outstanding in total. So this is where you see there's a higher percentage of shorts compared to outstanding shares. So, and this creates opportunities for short squeezes. Now let's get into short squeezes. So what happens, like I said, Reddit, they've been deciding, or Wall Street Bets part of Reddit, they've decided they're going to buy this JME stocks from ages ago and hold it. Whereas now we're in a position of many people have been selling short, saying it's going to be failed, people have bought it, so there's many outstanding. But by them holding it, and by it not falling, essentially, as I said with options, say you bought an option, or you bought the shorts, and it was $10, but now it's going up. It gets to a point where the person that sold it to you is going to say you need to put more money in because you have if you therefore bought the shorts betting that the company was falling price, but it's gone up, say it was £10, but now it's gone to £20. So you're over what you said that would happen. So now the company that sold you those shorts are either going to say you need to put more money in because you only put £100, you need to cover that money and put a higher amount, or they're going to tell you to buy the stock to be able to cover their losses. Now, by you buying the stock and they're buying the stock, that again is going to make the prices go up, because bear in mind what makes prices go up is just by buying when there's demand more than supply, and supply just means less people selling. So when there's higher demand, more people buying than selling, stock prices go up. So by you having those short positions, and there's more short positions than even shares available, and those people are wrong, it's not gone up, they're now forced to buy those stocks to be able to cover their losses. But by buying those stocks, the prices go up further. Now more people might still get more shorts, because again the reason they got shorts was because they saw this company doesn't look like it's worth what it's being sold at, so it's a pump and dump. So eventually they think it's going to dump, so they buy more shorts expecting it to dump because there's leverage and other things why they'll buy shorts. But again, a group of people, say the Wall Street Bets, are holding, people are not selling. So even though you are expecting people to sell because it's not worth what it is worth, people are not selling because many are holding. So you bought it, but because people are not selling and more people are buying, as more people have to cover their shorts, the prices are rising, more people are buying more shorts thinking it's going to rise, but it's going to fall rather, but it's not falling, and you get this cycle continues and continues. And this is what's happening with Gamestop, so, and others as well. So this is why it's very interesting this whole short squeeze thing. And in this battle with the millennials versus the older generation, because bear in mind, millennials now all are doing trading with their computers, with their with their mobile phones. They have access to the stock market compared to before, and there's less people that have that financial education and things like that. They just are going off of momentum. So it is very interesting. Now, I'm not telling people that what should we do. Now listen to random strangers on the internet and agree to what they're saying to make money, rather than doing what we used to do, or people used to do, of looking at company records, looking at PE ratios, looking at what their earnings are, what their future sales and things are going to be, and looking at what we expect the company is going to look like in the future. So that's fundamentals. So I'm not saying people shouldn't do that, but we should bear in mind that the stock market is evolving. So there is power the millennials do have, and there's power even in momentum, whether that momentum is on news of earnings report, or whether it's on celebrities tweeting this about a stock, like Donald Trump or Elon Musk just tweeting about Dogecoins. So in this battle of millennials against the older generation do not want to give millennials credit about anything. But if millennials have really decided for years that we're going to pump this stock and it's worked, give credit where credit is due. And millennials are one of the first people to buy Bitcoin before the institutions decide to get involved. Again, look at what's happening with Bitcoin. So it is very interesting what is going on. Like I got told, the stock market is a reality show full of drama, but you can get paid just by being in it. Now, I've also got a book you can subscribe to called You Are Rich, that explains a lot of things about ways of getting rich, and a lot of things that you need to do in order to maintain that money, and things to do with yourself. Because even in some books I've read, they explain it's about your character, it's about how you live, it's more about just getting rich and investing. It's not just about that, because even investing is about your emotions and things like that. So there's a lot. You can go on my website jonathanlillywrites.com and subscribe for that. But also I've got this, because you should also invest in your spiritual health. It's called Divine Wholeness. So go on Amazon, you can Google Divine Wholeness, or I'll put some links here, and Jonathan Lilly, and it's also available for free on Kindle. Yeah. So have a great day. Make sure you get some sea moss, some Irish moss, and stay healthy.